Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Friday, the 19th of November. Starting off with Asia Met, which there seems to be some signs of life, delivered, I suppose, by that 200-day moving average, which the shares have been sort of hugging over the last couple of weeks. Had 1 or 2 days below it, but basically the shares didn't really want to distance themselves too far from that. That's currently around 2.4 pence, and above the 200-day line, looking for at least a partial retest or retracement of the decline that we've had from 3.3, 3.4 at the beginning of the month. Best case scenario target at the moment above 2.4 up to 3.7, which is that February resistance line projection. On to Bezant, which recently had its placing, has been sort of edging up ever since. Good news here, I suppose, over the last week or so is the way that the price action has been wholly above the 50-day moving average at 0.15, let's call that. Gives us an initial target at the 200-day line at 0.21, and then perhaps after that the upper 20s, which was, in fact, support for the shares on the way down. Time frame on the upper 20s maybe by the end of the year, and the stop loss and end-of-day close back below 0.15. Moving on to Chesterfield, which has also been on the front foot of late. We've got a nice little bull flag here. It looks like a mid-move consolidation around the 200-day line. You typically get that, so it's not an unusual thing to do. And while we remain above the 9 pence area, looking for up to the top of that broadening triangle from February as high as 14 pence. So hopefully we'll see the shares flip through the recent high around 10.25 and then make it up to that February resistance line. On to Carclo, which doesn't actually really have much social media interest, which might actually be a good thing, I suppose. Here we had a situation where we had the 50-day line crossing below a rising 200-day moving average. The next time they cross could be a golden cross, and the run-up to a golden cross tends to be the strongest part of the cycle. Just seeing the shares trying to break out of that sideways bull flag. End of day or a weekly close clear of 47 pence recent resistance could start the journey towards 70 to 80 pence over the next 2 to 3 months. Stop loss quite tight relative to the upside at 38 pence, which is where the 50-day line is at the moment. Much requested stock, next rather, and actually one of the sort of the most followed, I think, of the stocks in the recent past. The only thing with Global Petroleum is that it spent months crawling around the 50-day moving average. That's currently around 0.53 pence. So we broke through that earlier this week and have flipped up quite nicely, helped by the break of the 200-day moving average at 0.58. Above that particular feature, looking for the top of that rising March trend channel as high as 1.2 pence. The reason for the rather ambitious target is that we spent so long consolidating that one would have thought the logjam of sellers and other negative people will finally be out of the way. If you're cautious on the shares, maybe wait for an end-of-day close through the August resistance at around 0.75, but looks as though with the break of the falling 200-day moving average, we're already on our way as far as Global Petroleum is concerned, so 1.1, 1.2, maybe by the end of January, something like that. On to a stock which is COVID play, I suppose. Here we've got Omega Diagnostics finally bouncing off a line from back in January in a meaningful way as Europe goes into lockdown. And the situation here is that looks like we've got the floor there at 40 pence. If you're cautious, maybe you wait for a break of the 50-day moving average at 48 pence. But above the 50-day line, looking for the 200-day moving average in the low 60s. Best case scenario target over the next 2 to 3 months, if this is indeed the final floor, would be up to 80 pence by the end of January, something like that. So let's see if that another optimistic call works. On to President Energy. And here you can see the shares moving as I update the chart, but break of that resistance line from May basically twice, but the second time we gapped through it, which is much more solid. And at least while we're above the initial November resistance at 2.2 pence, looking for 2.8 or 2.9 by the end of next month, or perhaps even sooner. Just a few stocks to go now. Let's check out the one that has got off to a flying start, Saita Group. Here we've got that rising trend channel from July. Shares bounced off the floor of the channel and broken through the 50-day moving average at 215 yesterday. The view now is that a weekly close above 244, which was the initial October resistance, could be enough to take the shares up to as high as £3.15, perhaps as soon as the end of next month. Just 3 stocks to go now. First is one that I did highlight before, but sort of missed out on all the joy that we've had in between. I think the gap through resistance, that resistance there in June was the trigger through 1.16, gapped again and then hit the target, the initial target 1.7, 1.8. The view now is that even though we've come up a long way, we could head up towards that resistance line there from last year as high as 2.8 pence over the next 2 to 4 weeks. So looking very impressive indeed on Starcom, given the way that we've already come up a long way. Stock with hardly any charting material at all, but I just thought I'd give it a mention, which is Technology Minerals. Here we've broken, we did actually break earlier on the initial range, but watch out for that 3 3/4 pence level. That was the sort of the opening bar to the stock's price action. So end of day close through 3.75 could be enough to give the shares enough momentum to rise a further penny, which is the width of the range, up towards 4.5 or even 5 pence over the next week or two. Stop loss back below 3 pence at this stage. Finishing off with the star of the day by quite some margin, Wishbone Gold. And did cover this stock a couple of times, or have done a couple of times, with the rebound off that falling January support line. Did also say that the shares were at their most oversold for a year, so that did actually come good in terms of being a potential turnaround signal. And we've now broken that line of resistance from June at 9.5 pence, and above that, looking towards the top of the broadening triangle from July as high as 14 pence, maybe over the next couple of weeks, something like that. But the ideal thing is at least we remain above 9.5 pence and make further progress from there. That's it from me today. More updates tomorrow.